Before we can move forward, it's important to establish the main reasons why investors fail. Welcome to JRC Bureau and the 15 Steps to Becoming a Successful Investor in Any Asset Class playlist. In the first episode of the playlist, we'll look into the various ways newbie investors fail. Keeping up with the Joneses, or the latest trend, is a big part of life. But when it comes to investing, following the crowd is not always the best idea. Time and time again, ordinary investors and the media have a knack for piling into an investment just after it has peaked. Things can suddenly appear, or disappear out of the blue when investing. Even the most stable company can suddenly run into trouble, while individual shares can be extremely volatile. Diversification can help improve the trade-off between risk and return. However, most new investors fall short of the mark by only investing in one asset class, for example Bitcoin. By now, we've all heard the stories about the people who made huge fortunes in Bitcoin, or made enough money from spread betting to quit their jobs. The problem is that by the time these stories hit the news, most of the opportunities have gone. Plus, these sectors come with some serious drawdowns. For example, digital currencies are magnets for fraudsters and government interference in recent times, and most spread bettors lose more money than they earn. Side note, if you are interested in getting bankrolled from $25,000 to $10 million to trade cryptocurrency, or any other asset class, check out the links below. For the crypto purists, I have an exchange for you to trade from in the link below, as well as a state-of-the-art cold storage wallet that holds cryptocurrency, NFTs, DeFi assets, dApps and so much more. If you're looking to manage your crypto portfolio from one place and keep track of your profit and loss at any point in time, then check out the CoinStats link. Back to the investor failure list. Everyone needs to set expectations when they start investing. Jumping in with just the hope of making money isn't the best idea. You need to set expectations for returns, for example, so you can judge the performance of your portfolio. If not, it's only a matter of time before that investment goes bust. Investors fail because they too often believe what they hear or read. Unsubstantiated claims of guarantees that are too good to be true lure investors to plunk down their hard-earned coin for promises of superior results, even when framed as lower risk or guarantees. But let's face it, everyone wants to be in on something really awesome and own the bragging rights to their own superiority. On the flip side of that, people are programmed not to want to lose money. But they often lose their lunches over market corrections, which are scheduled to happen more times than not. Often, an investor will watch others make money, and will not participate because they keep thinking the price of the asset will hit its peak. Instead, the asset price goes up more. Rinse and repeat that scenario as many times as it takes the investor to say, "I need to get in." Often, the result is the investor buys the asset near or at its high. Investors fail because most don't possess the required knowledge and experience to make consistently good decisions. Rather than researching, gaining an objective view of their goals, resources, and risk tolerance. The most common mistake is when investors attempt to become traders and time the market. While timing the market may work for a short period, it's been shown repeatedly that long-term compounding gains achieved through share price appreciation and dividends will outpace the nominal gains achieved through day trading and short-term holds. One of the more superfluous rumors that have been doing the rounds for a while is that it's not worth investing if you don't have enough money to get started. This is not true. If you have $200,000 or $200, it's always in your best interest to put that money to work for you. One of the often forgotten reasons investors fail is that many are simply too overwhelmed or worried about their lack of knowledge to even get started. Luckily for you, this channel will educate you about the ETF markets and cryptocurrency investing. That's a wrap for today, my assassins. I'll try to keep this playlist short and painless. If you liked what you heard, please like and subscribe and take a long position on the notification bell. Remember, when you play the investment game, you either become rich, or you spend the rest of your life measuring the cost of your ignorance.